Oh man. Oh man. This stock market is just way too entertaining right now. I love it. I love it right now. In this video, we're going to get into seven things that are just cracking me up in the market right now. This is my favorite time I've been in the market in quite a while, nonetheless. And man, it's just so entertaining. I just will say that it's so entertaining in the market right now. This is a fun time. You can usually tell how much fun I'm having in the market based upon how much video content I'm putting out. Usually, if I'm not having too much fun, I'm not putting out that much content. I mean, shoot, late last year into the beginning part of this year, I think I was only doing maybe 4 videos a week or something like that. It's just, right now, this market's just too entertaining, man. Make sure you're subscribed if you're not subscribed yet. Get your in before 1 million button now, okay? Also, a free 7-day trial going on for the private stock group right now. Check out pinned comment. So, 7 things I want to get into that are just cracking me up right now in the market, okay? So, obviously, you got all this hype around the Fed meeting today, right? And Mr. J. Powell, what's he going to do? What's the Fed going to do? And so Fed will aggressively dial back its bond buying, right? Sees 3 rate hikes next year. I mean, if anything, you would have thought that would have been maybe something that was taken as a negative by the market, right? But no, certainly the market did not take that as a negative. Actually, the market went up and had a great day and a massive bounce back. Look at the NASDAQ, ends up finishing up 327 points. From peak to trough, the NASDAQ jumped about 500 points roughly, right? 500 points, just a massive, massive move for the NASDAQ here today. It was kind of down and out. And then, as soon as pretty much Powell started talking, especially, that's when the market started jumping essentially, right? Basically, prior to that, when kind of the information broke, the markets didn't really move up. Actually, they stayed down, not down big, but down, right? And then as Powell started talking, and man, did the market just start going up and up and up consistently, right? He didn't tell us anything we didn't know. You know what I mean? It's amazing. And it just shows you how much the big funds really care about Powell. I don't think any individual investors were really making any moves today based upon what Powell said or didn't say. I think at the end of the day, moves were being made, fund moves were being made out there, right? Look at the Russell here today, a 1.65% bounce back for the Russell after, being down quite a bit, basically into most of the trading day. And then as Powell starts to speak, all of a sudden, boop, 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 and we're up and up and up, really. And it shows you really how much big money still really dictates this market. As much as us retail investors like to think, we have power. We're not moving the markets, man. This isn't moved by retail. This is moved 100% by big funds moving money into the market, essentially, based upon what Powell said, which was nothing. Literally, there was nothing in there that I thought was, oh my gosh, we never saw this come. There wasn't anything like that, right? But it just shows you kind of how much big money. Second thing that just cracks me up about this whole scenario is look at how much it caused small caps to just start rising like crazy once he started speaking, right? Tattoo Chef finishes up 3.5% here today, up another 2% after hours. Corsair Gaming up 5%, up another 1.5% after hours. Smile Direct Club up almost 7% here today, up another 2% plus after hours, right? It was a good day in the market when Wish stock's up. Okay, I got a friend that owns Wish. I don't know. He's gonna need some more Wishes. I don't know what he sees in that one, but even that one finished up, and it was a good day for small caps if Wish stock was up. Okay, and so it's just hilarious. That's all I can say about it. Hilarious. At the end of the day, when it comes to these sorts of stocks, like I said, Powell didn't say anything. Jay Powell didn't say anything today that was shocking to us, right? But yet, boom, all of a sudden, all the small caps start moving. Boy, could some folks run into some trouble here, okay? The shorts are getting desperate. They're starting to create fake accounts of me out there, which is something that's always done. There's always 1 million fake accounts of me on YouTube and fake accounts on IG and all over the place. Now they got ones on message boards as well, okay? Come on. Could have done a better photo than that, okay? Next time, use this photo. Okay. Put that one up there. Oh, man. Do they really think people are going to fall for that? Oh, gosh, okay? So, yeah, that's hilarious, okay? That's the third thing. The fourth of these 7 things is just kind of watching the investors' sentiment, specifically the past month or so, and the past several weeks, right? And it's interesting. If we go back to the end of last year and into the beginning part of this year, everybody was like, "Oh, I'm a long-term investor." Because a lot of people were getting in the market in April, May, June, July. And so a lot of people are like, oh, I'm a long-term investor, right? I'm a Warren Buffett. I'm a Cathie Wood type investor, right? And it's been interesting to see so many of these stocks that people are in falling 40, 50, 60, 70%. And now so many folks, I see it all the time. They're like, oh, I'm trading now, or I'm going to start trading stocks because long-term investing clearly doesn't work. That's a scam. And it's just like, it's not the way it works, okay? Anybody can call themselves a long-term investor when stocks are going great, right? It's the ones that stay with it. And when stocks are going down, they're buying the dip, and they're buying the dip, and they're holding, and they're holding, and they're holding, right? Anybody can say they're a long-term investor if the market just goes up every day or every other day, right? Like, that's easy. That's a piece of cake. But when stocks get tough, that's what truly makes you a long-term investor or not, right? Warren Buffett doesn't sit around because the stocks are going down for 6 months or 12 months or whatever. It'd be like, oh, this is long-term investing is a scam. I need to start day trading now. I need to start swing trading. Like, no, you don't do that. So it's just been interesting to see that kind of mentality from folks out there. Folks got to understand, like, at the end of the day, if you're really going to be about this life, you're really going to be about this life, and otherwise you're just faking yourself, right? And so if you're really planning on investing in companies, you got to understand you're going to go through down cycles on stocks. I don't care how great the company is. I don't care anything about that. It doesn't matter, okay? Any stock in the stock market, I've seen them go through down cycles for weeks, months, or years. I don't care. We can talk about Apple. We can talk about Amazon. We can talk about Google, Microsoft, Tesla. It doesn't matter what company it is. It doesn't matter how great the companies run. It doesn't matter how much revenue growth the company has. It doesn't matter the valuation. None of that matters. Every company out there goes through time periods when they go down. And those moments where people are like, man, I'm down 10% on this position, 15%, 20%, 30%, whatever, right? And the name of the game is you buy the dip. If you really love that company so much, shoot, if it's a 30% discount from where you started buying, why would you not love it now, right? And so, yeah, it's interesting to see that type of psychology, and I think this is a sort of market that is going to make or break people, right? It's going to break some people where they're going to say, I'm out of this market. Some people are going to be like, well, I guess I'm going to try trading now because long-term investing hasn't worked out for me. I bought Teladoc at $275, and today it's $90, so I guess this isn't for me, right? And it's like, well, how long have you been in that stock? Oh, 6 months. Oh, so you're a long-term investor because you've been in that stock 6 months? Come on, man. And some people will emerge, and they'll kind of dust themselves off. They'll put some bandages on their wounds, right? And they're going to be great long-term investors in the future. And like I said, a lot will just drop out of the stock market or try to do trading. That's going to likely fail them because good luck trying to make it doing that. And then they'll be out of the market. And that's just the way this game goes all the time and through all the cycles and all those sorts of things. And I'm just happy some folks can stay focused and keep their eye on the prize and not try to chase the breadcrumbs. Go after the loaf of bread, man. Go after the dang loaf of bread. That's the fourth thing that's cracking me up in this market. Fifth thing cracking me up in this market, and I spoke about this, is just, this group of folks, the short sellers, max shorting all these stocks here in December. And a lot of these stocks have already gone down so much, and they're trying to get their last squeeze of the lemon, right? They're trying to get that last little bit out. And I'm like, oh my gosh, do you guys know what you're setting yourselves up for in this situation? You have to, December of last year, you could have made a great argument for going short a ton of these stocks, okay? In January, you could have made a great argument for going short these stocks, right? Because a ton of them were massively overvalued during that time period. You could make such strong arguments. You can't do that now. You just can't do that, right? Some of these stocks, maybe they are, crap companies, but there's several stocks that are some of the most shorted in the stock market that actually have great long-term business models and are going to be here and are going to thrive in the future years. And to short those sorts of stocks trying to get your last lemon squeeze is just, to be quite frank, idiotic, to be honest, okay? Because here's the thing when it comes to these stocks. The short squeeze, on the flip side, when the market starts turning, right, which maybe today was the start of the turn, maybe it starts in January, we don't know, right? But regardless, you know it's coming fairly soon for these stocks, right? When it starts, it goes rapidly. And the short squeezes on the other side are epic. I mean, epic. You can see some of these stocks go up 50% plus in literally a matter of weeks. I mean, we're not talking about years. We're talking about weeks, right? That's what happens when you're a highly shorted stock and all of a sudden the buying pressure starts coming in. I mean, look at just basically the market just started to jump back in the last couple hours of trading, and look at what some of these stocks went up. Look at Corsair was up 5%. Smile Direct Club was up almost 7%. Look at a ton of these stocks. You know, look some of the moves some of these stocks made today, right? Tattoo Chef up 3.5%. Lemonade up over 6%. This company, I guess, was the most shorted, float shorted. Look at that. I went up 26%. And for what? The thing you got to understand is, you know, I looked at Tattoo Chef recently. If you want to short Tattoo Chef, which is hard to even get shares to short right now, you're paying 18.75% interest. And I covered this on a video earlier today, essentially, on Financial Education 3, which if you haven't subscribed to Financial Education 3, what the heck are you doing? We're about to hit 100,000 subscribers over there. It's like a huge deal, okay? But I covered it. Think about this. You short Tattoo Chef, right? You're max shorting this stock at 16, 15, whatever, right? If that stock goes nowhere for the next year, right? Nowhere. Like, it just doesn't go up, doesn't go down, doesn't do anything, right? You just lost like 20%. You just literally lost like 20% because you had to pay all that interest. Now imagine the stock, goes up, which is, guess what? A pretty high probability because the business model is amazing and it has crazy long-term growth and it has a cult-like following, right? And you're max short that stock, do you realize what could happen to you on the flip side here? For the last lemon squeeze, and I spoke about this last year, especially in January, around essentially what investors were trying to do in regards to a lot of these stocks in you know, how crazy the valuations were getting. They were trying to get like their last lemon squeeze of these stocks. And I'm looking at so many of these companies at that time, and they were massively overvalued. A lot of these companies were pre-revenue companies, and they were just trading at ridiculous valuations. Like, you realize you're buying some of these companies, you're trying to get the last squeeze of the lemon, right? Trying to get that last 10, 20%. Like, these stocks aren't going up 100, 200% over the next year. If anything, they're likely to fall in a massive way, right? And so now we're on the flip side, where now a lot of these stocks are set to be beasts, okay? And folks are still trying to get, the short sellers are trying to get their last lemon squeezes here, and it's like, woo, good luck with that. That's a dangerous game to play. You should have been max short in these stocks long before now. That's all I'll say about that. I mean, you know, the fact that now these stocks are max short is just, it's laughable. That's why this was the fifth of these seven. Okay, the sixth of these seven things that's cracking me up right now is also in relation to shorts, like shorts thinking people are going to sell based upon the fact that these stocks go up 6%, 10%, 15%, 20%, okay? Nah. Here's the thing. Weak hands are gone in these stocks, right? Like the weak hands are long gone out of these stocks, right? They've been shaken out a long time ago, right? The tax harvesting folks are almost all gone into these stocks, right? Because in almost all these stocks, like you know, almost everybody's down, right? And so unless we got any stragglers the last like 2 weeks here of the market being open, like those folks are gone as well, right? So weak hands are gone. You got the tax loss harvesting folks gone. And lastly, the folks that are investing in these companies, they got a long way to get back to even break even, right? Never mind profits. And remember, let's say you bought Smile Direct Club at $7, right? You probably bought it because you think it's going to $14, $21, $28 over the coming years, right? So when you finally get back to break even at 7, you're not selling because at the end of the day, you believed in this one. You went through the thick and thin of it, as they say, right? And so you're going to hold all the way through unless literally there's like you making a fundamental decision, like you don't like the company or whatnot. But usually people, if they don't like the company fundamentals, they'll sell out way before that, right? They won't just hold, hoping something happens there, right? And so at the end of the day, a lot of these folks still got to get back to break even. Never mind when they start making profits. So I think the shorts have this like fantasy in their head where it's like, okay, these stocks might go up a little bit, but then the longs will just sell. And it's like, dude, the weak longs are gone. The tax harvesting folks, 98% of those people are gone. Maybe you got last like 2% of stragglers there, right? And you got so many folks that are so far from break even on these stocks. They're going to be holding. And so that's where I get into this whole part about the short squeeze and how ridiculous this can be on the flip side. To get that last lemon squeeze is just, it's crazy, right? And so that's the sixth thing that's just cracking me up right now is that folks just not these short sellers just not understanding like what's really transpiring here. If they just use a little common sense and put like the pieces of the puzzle together. I don't think the shorts really, I don't think they use their brain. I don't think they really just think like play a little chess for a minute and just like plot this stuff out, see how the pieces come together, and you also start to figure out, oh, wow, this is going to be rough, right? Seventh thing that cracks me up is, I see some people get frustrated, right, by different publications and whatnot that will write negative articles or come out with negative kind of what are seen as like hit pieces around a stock, right? And they get really, really frustrated from the long side. They're like, oh man, they're putting out all this negative stuff. At the end of the day, you can't worry about that, man. It's just, for somebody like myself that's been in the market for a long time, I just laugh it off. Like, it is, like, if they want to write negative stuff, write negative stuff. Like, all of us we're Tesla shareholders in the 2018, 2019 time. We know what we had to go through. We knew the short seller attacks. We knew how many hit pieces there were and articles and negative commentary and videos that were done, right, around Tesla and how they were going to go bankrupt and they weren't going to make it, this and that. At the end of the day, just this stuff is what it is. Like, people are like, oh, I'm going to try to report this to the SEC so they can look into it. Dude, give me a break. You know what I mean? Like, they got a million other things to worry about. Because people are writing negative articles about these stocks, who cares? Who cares? They're not, at the end of the day, if that's going to shake an investor out of the stock, then they weren't in that stock for the long term anyways. You don't want to attract investors that are on the fence, right? You don't want to attract, because think about it like this, right? The way I think about it is, if I hold a stock, right? If I buy into a company, I want folks that are, especially if I'm a long-term investor, I'm coming from a long-term perspective, I want people that are hopefully going to hold that company with me in the future, right? We're like partners in the project, right? Think about if you were like a private company and you were looking for an investor. You want to attract people that aren't just looking to sell tomorrow if some guy walking down the street says, I'll pay you, You want people that are really in this for the coming years, right? And so, do you really want to attract potential investors that are on the fence? No, you want to attract the people that have the conviction, and that if that stock goes down, they're going to build their position bigger. And when things come out and the sun comes out and the company thrives, you'll thrive as well, right? There's the type of folk. You don't want to attract investors who are just kind of already shaky on the stock. Because if an investor sells out because of a negative article, if they sell out because they watched a negative video or they saw a negative article on a stock, if that's what scares them out, they shouldn't have been partnered with you on that project anyways and invest in that stock, right? And so that just cracks me up. But I understand, like, people think like, this stuff is driving emotion. It's not. It's not. This is flat out, okay? Like I said, if negative articles about a stock is what scares people away, those people, those weren't the ones to be with in that investment anyway. So yeah, because when you go down that route, right, you go down a slippery slope, and then it's like, what if you're a long and you put out 3 positive pieces about a stock? Then are you, a pumper, right? And then is it like some situation where it's like, no, you can't do that. You can only put out 1 positive piece about a stock. You go down a slippery slope, so that just cracks me up. So anyways, guys, hope you enjoyed this. As always, there's a lot that's just cracking me up in this market right now. It's entertaining, man. I'm loving it. It's too good. Much love as always. Don't forget to subscribe. And make sure you subscribe to Financial Education 3. We're hitting 100K very, very soon. And that's the bottom. Peace.